Hello, face. How's everyone doing today? Put a smile on your face. How are my trading warrior brothers and sisters doing this morning? Arif, Glenn, John, Patrick, how are you? Yasir, V, Van, Zia, the whole crowd. Okay, so just I have a few updates I want to share, and I'm going to pass it on to the team. Okay, we'll get to that, David. Jason, how are you? Okay, so this was actually my best trading call of the week. The yen crosses the yen. They did reverse on Tuesday. Down here I was saying book half, at least half, go with BE stops. I think there could be a recovery up towards 47. You know, they say stick with what got you there. So the guppy got us there this week. It's provided, you know, a very nice 200 pip trade. So between here and 47, I'd be laying those shorts back out. Your risk is above the high. Okay, so if you get them off here, you're talking 100 pips. And what also backs it up is we haven't reached Greg's target. So I'm sharing this with people who are not, but should be ForexAnalytix subscribers here. So this could be the B wave here. You know, these are approximate waves. So we've already achieved it. It looks like it's under 47. And equality would take it to 43. And some type of fib extension would take it down here towards 41.5. But this was a 200 pip move. So I'm actually looking for 1.618. So from wherever we peak, I think there's potential for an over 300 pip move. Hello, Yasser, how you doing? Okay, so I feel the same way about the euro yen. And euro yen might even be a better one, especially if we could get a rally back to 970 or 30. Because I'm a little conflicted. Yesterday I saw euro pound failing. It has followed through today, but on the 4-hour chart, the RSI bothers me a little bit, and maybe we're going to rally, but definitely that was at least a short-term turn in euro pound here. We start taking out 88, we're going to 87.20. So this would actually favor the euro yen short. And everyone's talking about Canada, Steve Vogie, plus Grega and Nick and Blake. We've all been talking about 127. I know Steve's been adamant about 127 and not trying to bottom pick it. When we were in here, a lot of people wanted to, you know, try and fade it for rally. Steve warned against it, prudence over valor. And Stelios has some macro Canadian to share with us today. And for now, I'm through.
Good morning, Dale.
Yeah. So go ahead, Blake.
You're out of breath so early. I mean, it's only been a couple minutes.
It's all the supplements.
I guess so. All right. Well,
perhaps he had a very active morning. Who knows? With Dale, anything is possible.
Right. Exactly. Good morning, Steve.
Good morning. Good morning, all.
Hey, Steve.
All right. So, hey, I wanted to chime in really quick. There's a few things that that I want to talk about. First of all, I'm sure everybody's watching this Aussie dollar. I mean, this is dangerous. This is a dangerous. If you're short, this is a dangerous place to be. I mean, you know, we have really. I mean, we're trying to move out of a real big multi-year base here. You know, you're talking, you know, 2015, 2016, 2017. We're really trying to make our way higher. This is huge resistance. So I can't take it away. I can't take away from that the fact that this is just enormous resistance here. But we are making our way higher. We're trying to anyway. And again, you know, this goes along with yesterday's commentary about the inflation theme. You know, and and I traded, by the way, I closed out of my Euro Aussie short early this morning, right at like literally a couple pips from the bottom. I'm very lucky that I got out where I did. But I did take my position off the table in the Euro Aussie. And I almost went long the Aussie last night, but you had Chinese trade balance, you had some, Australian inflation numbers, which came in, pretty hot. Actually, the inflation data last night came in at 4.4%. The mark previous, economists don't do estimates on the M1 inflation data for Australia, but that came in at 3.6 last read. Hold on, let me double check that.
And Blake, the formation you're showing is an ascending triangle, and if it manifests the measured move, it takes it to your 2.618. I know that's very long term, but that's where it take it.
And I was telling the guys that I chat with normally. Hold on one second. You know what? Hold on one second. Sorry about that. So the talking about like the Aussie. I mean, if we're really discussing inflation, inflation becomes an issue. These commodity currencies could break higher, and again, I know everybody is accustomed to, and myself included. So this is not a one size fits all. This is, when you look at the Euro Aussie, like here, let me pull up a weekly chart of this. Just give you a better view, okay? And then I'm going to compare it to the S&P. Let me just compare it to the S&P really quick. Well, here you can see that we have a divergent relationship a lot, okay? And you have to go. Let's go back and get rid of a lot of this stuff. You can see a lot of divergence here. That means it's an inverse relationship. So, stocks go up or stocks go down, Euro Aussie goes up, blah, 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 blah. Opposite, right? Well, recently, we've seen the stock market rally, and the Euro Aussie has been moving higher too, like the last, this whole year. Well, again, if you start thinking about like inflation, if inflation becomes an issue, and let's say the stock market doesn't like an inflationary data, and the stock market starts to come down as everybody's tightening, but inflation is still on the rise. And let's say inflation, let's say the central banks, which are very well known for missing a lot. I read an article just like last week, and I thought it was really interesting, about every central bank goes into a recessionary period about as upbeat on their outlook as possible, right? So in other words, they miss the fact that a recession is coming, a recessionary period in the markets, and they miss it completely. They go right into them like, hawkish and bullish and blah, 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 and outlooks are great, outlooks are improving, and then all of a sudden, bam,
It's going to be the first time, as you said.
No, it's not. It wouldn't be the first time. But let's say, and this may be crazy because it's been an argument that the markets have been wrangling with for years. I mean, years. This ultra loose monetary policy globally is going to spark inflation at some point.
And they're way behind the curve on that. Is that where you're going, buddy?
Well, yeah, but everybody's been trading that, or at least thinking that thesis. Oh, huge inflation is coming, and we've all sat here for the last 3-4 years. And we're like, where, when, and everybody has been, inflation is coming, and even now, you talk central banks, they're tightening. They see inflation is starting to come a little bit, but how about if they misjudge it, which they're obviously known to do, and they misjudge inflation. Let's say inflationary pressures start to really hit the market. What are going to be the big beneficiaries here? I mean, first of all, the things that are going to probably get hit the most I would say, are asset prices. So stocks are going to come down. But commodity currencies may come in fuego, meaning they might become really hot. So I look at the Aussie and like the Euro Aussie, for example. We could have a situation where stocks do this, they correct, okay, and I'm just drawing a not a like a forecast of exact levels. I'm just saying maybe that happens, but maybe this happens the same. We see a sell-off in the Euro Aussie or a strengthening of the Aussie dollar.
Yeah.
I think it's entirely possible in this type of environment, and remember, we're dealing with markets in the current environment, not what had happened, correlations in years past, because the market was different, the economies were different. Anyway, so with that being said, I'm not short the Euro Aussie right now, but I guess the point I'm trying to make here, let me go ahead and get rid of that. Oops, let me get rid of that this way.
Sell all rallies.
Well, not yet. I'm not.
Okay.
I'm not sold on that idea yet. But what I am looking at is and I told the guys that I chat with every day, that if the Aussie dollar closes above like 78 cents for the week, maybe this week, maybe maybe next week, but we start closing above here, I'm going to go long the Aussie against probably a lot of stuff, like, short Euro Aussie, short pound Aussie, long the Aussie New Zealand again. I don't know. But those are things that I'm really, really thinking about doing. Now, one other thing I want to point out is I shorted the NASDAQ today. Actually, when I first sat down, I shorted the NASDAQ. Now, the reason is twofold, okay? The NASDAQ being high beta names, well, actually I could say it's threefold. Being high beta names, I think if we are in an inflationary environment, these are the ones that are going to get hit first. Now, the NASDAQ rallied yesterday because of Janet Yellen, okay? Because everybody's like, oh, she's going to be, she's a little bit dovish, maybe she's not going to raise rates, so stocks got a big boost across the board. What you might notice here is actually the NASDAQ hit channel bottom, or hit the channel, underside of the channel here. All right. Yeah, we back tested. We had a really wicked move in Asia last night. Asia took out the stops right above here. Then you see Europe, took us a little bit higher, and now we're reversing completely. I'm short some NASDAQ from this morning, but if we close, and I'm going to have to draw this out for you. Where's a pen? So you got to, and Dale and Steve, I know you guys are relatively new to GoToWebinar, but I'm gonna. These tools here are pretty cool when you're drawing for them, because people don't at home, they don't have them, but we do here. Yeah. But if we get a candle that looks like this, and we have some sort of shooting star that looks like this by the end of the day, so you can see what I'm drawing. I'm drawing a red candle with a long wick. So we close the day at the lows. I will add by the end of the day. So I will get more short the NASDAQ by the end of the day. It's a perfect reversal. It's a perfect screw job anyway. When I say it's a perfect screw job, it really just kind of knocked people out here. But we tested the underside of this trend line. We kind of broke this trend line above here just slightly. Here, let me go back like that. Broke above this this resistance here, putting in a reversal. So there's a lot of time left in today, but it's something that I'm obviously paying very close attention to, and by the end of the day, it'll tell me a lot. I don't want to get super aggressive right at the moment. This has been a hell of a rise, though. I mean, if you look from 55.60 to 58, I mean, that's a 250-point move in the NASDAQ just over the course of the last week. So I'm very inclined to sell here, which I already did, but I'm inclined to get even more aggressive on the short side, especially if this market Trades heavy. I love when we, and this is no offense to Europeans, I love it when we reverse in Europe and we close in the opposite direction of North America, because then we usually get, that means it trapped Europeans and it trapped Asians more than likely in the wrong direction. Therefore, you get a follow through typically in Asia the next day. So in other words, we had Asia last night, which going back to a 4-hour chart, we had Asia last night buying into this rally from Yellen, right? We had Europe buying more, going, oh, well, you know, Yellen gave us the green light to buy stocks. Then I almost said it, the poop ball reverses right now. And if by the end of the day, we end the day lower, I'm going to get aggressive, because then I know that these guys that bought here over the last 12 to 24 hours, they're screwed. Yeah,
they thought they were buying a breakout.
They thought they were buying a breakout here. You know, they thought they were home. There's a home run for new all-time highs. You know, we closed down here. It's game on for me. But a lot has to happen. It's not, you know, it's not a oh, I'm gonna get aggressive right now. You can't do that, because we could still theoretically, you know, we could still do this.
Yeah.
You know, we can still go to all-time highs. That can still happen. And with this market, you can't dismiss the fact that it can't. You know, this market is very good at just continuing to rip. So, but if we do close, and I'll just draw this out for you, I guess I'll just leave it drawn. If we do close down here, then I expect us to do a full-on retracement. You know, then I'm expecting a move. I don't know if the trend lows, you know, a lot has to happen to get us way back down here over the next day or two. But I do expect a bigger pullback in Asia and into tomorrow. Then we get into Friday, and then it turns into Freaky Friday, and who knows what the hell happens after that. Okay, so if you guys were trading the Euro Aussie, like I said, I am out. I got out this morning. So I got out just before the ECB. Now, Draghi said right here, somewhere right around here, Draghi said, we'll discuss ECB policy at Jackson Hole. That gave the green light for people to cover shorts in the euro, because they're probably thinking, oh crap, are we going to have, you know, maybe ECB is going to do more to support the economy. In my view, what could happen in August, which is next month, when during the Jackson Hole meeting, what could possibly happen is the ECB says, hey, you know, we've been ultra loose for a long time. Now we got to start figuring out how to, you know, stop buying Babe Ruth baseball cards and every other asset that we can find, because we're running out of stuff to buy anyway, and start to unwind some of our balance sheet. And if that happens, the euro is going to get, the euro is going to go crazy, and maybe that is what they're, maybe that's why they covered it here. Who knows? So people think there might be a change in the works, because Mario Draghi's been on a certain path, and so maybe they're going to be on a different path. But if they start tightening, the euro could continue to go higher. Okay. The euro could continue to go higher. The dollar could really continue to go lower, but we could really see asset prices really drop too. Because as everybody starts to tighten globally. Remember, this has been the thing we've been talking about for the last, 2 weeks, 3 weeks, 4 weeks. What happens, and why is the dollar so weak? Well, the dollar is so weak because everybody else is starting to tighten. We might even be near the end of our tightening cycle. So, so anyway, those are just some, just some food for thought for you guys.
I hope that coffee's in a ForexAnalytix coffee cup.
Actually, it's not. It's in my wife's company cup. It's a birdie tail cup. But I only have 2 types of cups. I have birdie tail cup and a ForexAnalytix cup. So this one just happened to be the one that I grabbed this morning.
They're beautiful. I love the color of the cup.
Steve, did you have some comments?
Yeah, I just said traitor.
Traitor, yeah, right. So anyway, it's been I guess, you know, what we should probably talk about is a little bit of this Canadian, because Stelios, he wrote in today's ForexAnalytix macro piece about the Canadian that the market has a mousing problem. And oh, there he is. I knew I could call him out.
We're going to sip a few
I knew you were going to say that.
Well, you knew I was going to. Anyway, it was pretty funny. We all laugh about it because, look, I always have told people over the years, and when I was with the Wise Trade group, I sent out alerts all the time. Yeah, because that's all I'm doing all day is trading and sitting in front of the computer, and I'll send out alerts. And I type so quickly that when I write stuff, it's like, and people would say, "Oh, Blake, there's a typo." I'm like, "Look, you understand exactly what I wrote.
Yeah.
You're just being nitpicky, and I can't type as it is, and I'm just trying to get information out to you as quickly as possible. So if I write, you know, fart instead of fat, you know, for candle, here's a fart candle, and I meant to say fat candle, you know, it was a big fat candle, but it was not a fart candle. But we can joke about it. But so when Stelios wrote housing problem right here, it said high mousing problem, and a lot of the traders that I know were giggling about that because and especially Joe, who lives in Canada, is like, I didn't know we had a mousing problem. Anyway, I thought it was funny, Stelios, and I just had to harass you, but never. We totally understood what you meant.
Thank you. I appreciate that, Blake. Thank you. What's your back, though? What's your back from now on?
All right. I'll make sure. I might have some like rats running around my house at some point.
He's an ex-Marine. He knows exactly how to watch his back, right, Blake?
That's right. We call watching your six. In the Canadian, though, I mean, the Canadian, we had such a massive move. I want to show you guys something in here. Let me grab it really quick. Those of you that don't get this daily, where the hell is it? Here, I'll get it.
ESI.
By the way, just to let you guys know while I'm doing this, here, I got some good news coming here. Here, let me grab this. Oop, that's not what I wanted. Let me grab a different. Okay. Hold on. Sorry, I keep doing this incorrectly. All right, there we go. All right. So here's the DSI that we subscribe to, but I want to show you guys the Canadian dollar. Okay, it's at 86. Anything over an 80, you guys start being really concerned with, because the sentiment is too strong. So then it tends to be like a contrarian indicator, right? So we got this Canadian dollar was posting an 86 on DSI, and euro, by the way, one of the clues has been with the euros was at 86 yesterday, and you wonder why the euro went from 115 to 114 yesterday. Well, I think a lot of it was their positioning and sentiment, you know, and if you look at today, like anything below 20, when you start looking at like the VIX, you go, oh, the VIX is at 12, the dollar index is at 20. You kind of got to start looking at it going, okay, well, volatility, there's a good chance volatility is going to pick up while we're down here, you know, as we drop into the teens. It's always a concern, and not so much yesterday. Stocks still went up yesterday when we were at 17, but now we're at 12. You know, these things concern me because you have the potential of, like, you know, the Canadian dollar, for example, squeezing. Now, and by the way, I tried to play some Canadian long last night. I shorted New Zealand Canadian, and it didn't work out. I lost 40 pips this morning. I got up this morning, it was my losing trade on my board. I was like, man, that sucks. But I knew it going in after, you know, that I couldn't be super aggressive because we had already gone so far, okay? But the dollar Canadian is in sell rally mode, and I do believe if we can get back to 130, I'm all about, you know, I'm all about selling the dollar Canadian, or maybe buying some Canadian currency. So
really? Is the question.
What's that?
Will we get to 130? Because, you know, I also believe that at around 128, we might get like the fourth wave of the third wave down back to 130. But this thing is simply relentless, and we might even, I mean, I'm thinking of setting the bar lower to a possible rebound to perhaps even 129 or so.
But you see, you know, Steve, if you look at, okay, just take a look at the Canadian dollar versus what's happening with the Aussie and the Kiwi. Those two currencies are extremely strong today. Extremely strong, like on the cusp of breaking out. And the Canadian has been actually weakening since yesterday. All right, so I don't know. I mean, if the Aussie and the Kiwi, you know, kind of fail here and they start showing a little bit of weakness, you know, maybe the Canadian might push up. But maybe 129, maybe 130. I mean, somewhere up in this neighborhood. I don't think there's any, like, you know, really good, like, solid number that I'm looking at. Okay, one last thing. I'm gonna let you guys go. So let me see if I can. Let me see if I can pull up something really quick.
Dale, do we have an interview for today? As long as Blake is looking for that.
Yeah. Yes. Chris Kerr. You know Chris?
Oh, we have Chris Kerr. Yeah.
Yeah.
Okay.
I know
Blake,
Blake tweets with him, so I think he changed his Twitter handle. I thought he used to be FX World Boss, so I'm going to ask him about it. But yep, Chris.
Okay.
I think I've talked to him before. I can't
No,
remember any. I only remember everyone's trades, not everyone I've talked to.
I think Chris uses a lot of GAN as well, if I remember right. Am I correct in that?
I'm not sure.
I'm pretty positive that he uses, you know, GAN and Fibonacci in time as well. Go ahead and ask him. If
Okay.
I'm not mistaken, which I don't think I am, he's very good in that type of analysis. Probably he's one of the best I've seen in that type of analysis. If I'm not confusing him with somebody else, which I don't think I do.
Okay.
So so just to let you guys know, shoot, let me see if I can. Dang it.
And hi, John. Welcome to Face. Yeah, I'm Coach, and Blake is Sam Malone. And wasn't that a great tweet, Blake? You know, that guy saying that when he said I'm Coach, and the guy said the Cheers team is really working out. And he asked if Steve Volge was Frazier or what was the mailman's name again? Cliff. And I said. A masculine Frazier, because Steve is very detail-oriented, like Frazier.
All right, so I can't find. Maybe this is it. No, shoot. Okay. I wanted to let you guys know. I have a. I can't. I don't know where it is. We have. ForexAnalytix, we have new T-shirts that should be delivered here in the next week, and we have two of our special T-shirts that like limited production, custom-made T-shirts. That one of them says Chief Risk Officer. The other one says I believe the one I got says will work for Pips. I think that's the one that I got. Anyway, yeah, we got or something else. I forget.
I don't need a sign on the street corner anymore.
Right. You can just wear this T-shirt. Anyway, we'll at some point we'll do a special giveaway for those, and so you guys can have an opportunity to win a shirt. And then also, I've been considering making like a store, but the problem is if I make a store front, then somebody's got to handle that, which would end up being me. So I don't know if I really want to take on that responsibility, but I'm still considering it. But then you guys can figure out how to get your T-shirts. So anyway, all right, I gotta go. I gotta hit the open, guys.
All right, buddy.
All right.
Yeah, good luck, Blake.
Hunting, Blake.
Good
Thanks,
hunting, indeed.
Why don't we hand it over to Stell now, Steve?
Yeah.
Oh,
Yes,
sorry,
definitely.
I just passed over to Steve, but sorry, I'll go
It's
over.
okay.
You can
I
pass
don't
over.
actually have anything to show. I just have a couple of thoughts to share. So
One has to do with the mousing market a bit.
the mousing market, yeah, Tom and Jerry. So basically, yesterday I was I looked at the Bank of Canada. They raised rates, and I just started to think about it. And I looked it up, and their inflation has been pretty low. Last 4 years has been 1.3 to 1.6. This year is running at the same rate, so that's below target. The Fed also, inflation is below target. So what are these guys doing? I just started thinking, what are they doing? What are they trying to do? Are they trying to get ahead of the curve? What is it that they're doing? And then that got me to thinking about QE and zero interest rates, or near zero, or a negative. And you got all these economists and academics and all these central bankers, and they say, yep, QE and low rates are inflationary. That's beyond doubt. And now we've had this for 6, 7 years, whatever it is, 8 years. And what are we seeing? Well, we're not seeing inflation, just like Blake said very correctly. So what do these low rates and QE actually do? Well, they encourage risk-taking. So they, as we have seen, they prop up certain assets, actually most assets. So housing, equity, stocks, bonds, everything. That all goes up. So housing goes up. And housing, as we all know, is a huge part of the average person's expenditure. So when you have housing going up, you have education going up, you have healthcare going up double digits every year. What does that do? Well, that essentially reduces the disposable income of the average family. I'm not talking about the top 1 or 5% who have more money than they know what to do with, but I'm talking about the average person. So their income, their disposable income is much lower because average wages today, say in the US or the UK or any developed market, they're the same as they were in 2007, 2006. Maybe, actually, I think I read that in the US, the average income is actually a little bit lower. So think about what you could buy 10, 12 years ago with 50 grand a year and what you can buy now. It's a very different proposition. So I was thinking that actually QE and zero rates, or very close to zero rates, for a prolonged period is actually deflationary. And it has to be, because that's what we're actually seeing manifesting. So I see the Bank of Canada, I see the Fed hiking, and they are, in a way, I think, trying to get these asset prices a little bit lower. Obviously, they don't want to crash. They don't want a housing crash or an equity crash.
It's also a fear of bubbles, Dale, which we'll never admit. I remember it was last week that I opened up this conversation with Dale. I told him that, listen, what if they believe that asset bubbles are getting in very dangerous levels? Would they come out and say, oh shit, we have to hike because we're afraid that if we let this situation as loose as it is for a bigger period, then we're in huge danger of getting a 2008 incident again? No, of course they're not going to do that, because even if they imply that, you understand what kind of panic that would create.
Of course, of course.
Yeah. On the other hand, what you're saying is absolutely right. They are deflationary, because what people don't understand very often is the following: accumulate, and because it's connected to that. Wealth accumulation and an increase of the inequality is also deflationary, because, as you very well said before, if I have 1 billion in the bank and if I make that 2 billions in the bank, most likely I'm not going to put back the same percentage to the economy of the new wealth I accumulated than a person that is making $30,000 per year would, if that $30,000 per year became $60,000 per year. Yes. The vast majority of that income change would go back to the economy and not get accumulated, while for the super wealthy to keep increasing their wealth, obviously, okay, you have a 15-meter boat. Are you going to necessarily buy a 100-meter boat? No, not necessarily. You know what I mean?
Yeah. There's also a historical precedent. In 1937, they called it the Roosevelt recession because he cut back on government spending because he thought we were out of the woods.
Out of the woods, yes.
And the Fed was tightening. So we're cutting back government spending now, whether it's Medicaid, whatever it is, and the Fed is tightening. So there's a little bit of, history repeating, rhyming happening right now with both the Fed and government spending being becoming restrictive.
No, the only sure thing is that this thing is not going to end well, and it's not going to, and it's going to end with a bang. But
for us, it will. For us, it will.
Yeah, but it's not a certainty.
Oh, that's
that
all I care about. Everyone knows what a selfish son of a bitch I am. As long as it works out for everyone in FACE and our subscribers, and we're on the right side of things, let it happen. That's where I'm.
Yes, but in generally, the world economy is, is not in a good state, and we should all expect that it's a matter of time before we see some kind of a reset, because everything is currently based on a large, in essence, it's a large global Ponzi scheme. I mean, the future liabilities that the vast majority of the governments have already taken to people that are entitled to future pensions and to future payments and to future entitlements in general, in combination with the huge growing debts, this is a napalm kind of situation. I mean, very well it's going to end very badly, but this is not something you can time. So that doesn't mean that if you have such a thesis, which
you can't trade it.
No, you can't. You definitely can't. That's something to keep in the back.
I've tried.
Yeah. No. It's a lethal recipe to trade. I mean, most probably, you're going to implode. So that's why.
How can you trade a historical event that happens in cycles every 70 years or 200 years or even longer, which a lot of these psychopaths are talking about, with a 4-hour chart?
The problem, there's no chance. But the problem is that these events have started becoming more frequent, and I think the fact that they have started becoming more frequent is not accidental at all. It has to do with the fact that a combination of the political cycles and the will of the government to manipulate the business cycle and to try to tame the market forces creates extreme events. And I think that as long as they do not decide to actually stop doing that, which is not very easy to do, as I initially said, the problem is the political cycle. Let's say that you're a politician. Let's say that you're Trump. You just came in power. Okay, this doesn't have to do with Trump. A political comment. It could have been anybody. It could have been Hillary or whatever. You don't want to really have an economy implode in your hands, because you know that you have 4 years to govern. Yeah, you have 4 years to govern. Perhaps if you're lucky, you get another 4 years, and that's it. And you want to leave a legacy behind that says, okay, that was a good president, that president helped the economy. Like, for example, Clinton did, which, let's be honest, Clinton got very lucky with the internet boom. I mean, I'm not saying he was a bad president. I mean, having to do with economics, he and his staff knew more or less what they were doing, but they also,
Robert Rubin.
They also got the timing right. I mean, it's very important. Yeah. So let's say, and that's the problem with the political cycle. Let's say that you are ex-president, you just come in power, and your advisors tell you that, listen, it's not that we're going to publicize that, but we're really, things in the economy don't look good. We're expecting that sooner or later we're going to enter another recession, or some serious shit is going to start happening, and we should probably do that and that and that to avoid getting like a big implosion. But on the other hand, we can do that and that and that to push it a little bit back in the future, and hoping that it's not going to happen in your hands.
What do you think? No one wants to be Herbert Hoover, Steve. Hooverville.
Yeah. What do you think the average politician decides to do? Unfortunately, you know what I mean?
Yeah.
Yeah, and that's a problem. That's why the political cycle is a huge problem for economics, and that's why the intention of creating central banks that are completely independent is obviously the right way to go. But the question is, Are central banks completely independent with politicians? Absolutely not. I mean, it's more than obvious, you know what I mean?
The secret of Jekyll Island. You know, I want to congratulate you. I know you made a lot of great trades in the last 30 days or so, but I think one of your best was EuroCAD. And someone's asking about it, and
it has almost filled the gap.
About it. Looks like it's due for some type of, did you cover it here, bro? It filled the gap. Remember we were talking about it filling the gap?
It didn't though. It didn't. It came very close, but it didn't.
Oh, close enough for government. But it still looks negative. Would you sell a rally back to your red line? And where is that?
You know something? I'm very comfortable here. I mean, I'm around 600 pips in the money, so I'm going to say what I'm going to do with it. I mean, I still want to see a test of this confluence of the 200 DMA and the equality target of ABC. If this is an ABC and it doesn't end up being something even bigger than that, I mean.
See, Fraser, everything has to be right to the, right to a detail guy, micro. And I want everyone to take a screenshot of Steve's chart on EuroCAD and take a picture of an ending diagonal, a 3-drive pattern. And if you're patient and you wait for those setups, this is how they could work for you. So take a screenshot of that.
By the way, as I said yesterday, I'm now involved with this as well, which I'm lucky because it's also one of the trades that from the moment I entered it, I never got out of the money. I mean, we're seeing some nice continuation lower. I have an entry at 947. We're currently at 942 and some change. And I would really like to see some kind of equivalent move to at least test this high at 924.40, whatever it is. Yeah. So, this scenario is now out of the door. I mean, we didn't get one more retest. We failed short of that up here. And I really believe that EuroNOK can work in the exact same way, especially if here we see some unwinding of the euro positions, which is likely, at least a temporary one, and if it gets combined with our view in crude, which calls for a larger rebound. Yeah, so yesterday we saw some kind of a retracement, but today again we're coming in strong. I mean, we're getting a hammer already. So, this kind of a thesis remains live and active. And I also need to remind that I remain, this was actually perfectly timed because the market simply decided to be very kind with us and give us a perfect retesting of this ABC and then a tweezer top. This is one of the times that you see that a technical pattern combined very nicely with a candlestick signal, because we got this candle right on the resistance. Next day we get a tweezer top, and this second candle is also a shooting star. Next day shows continuation. That's when I knew that that entry was almost perfect. And now we are finally seeing some acceleration below this trend line. And as I said yesterday, my target is between 815 and 817.40. I already have an order to to take half profits at 817.40 here. So I think now we covered the crude oil and the crude oil correlated directly or indirectly assets. I see a friend back then, V, asking about the Aussie Kiwi once again. Let me have a look at it because...
And that was a great presentation by Stelios. It's good to think about macro events. They can give you biases and things to look out for. So very interesting. Thank you, Stel, for your macron review.
Stelio, I don't know if you had anything else to say about the macro stuff, but as Dale said, it's very important to have a very good outlook of the macro environment. But it's also equally important to know not to trade just with macro, because macro is like a macro is like a large magnet. It at the end pulls like gravity things onto it, but that doesn't mean that anything that rotates around it, which is going to be pulled immediately. So that's why we do technical analysis. I mean I have a background in economics, so when I first started getting involved with trading, I was like looking a lot of macroeconomic indicators, etc., and trying to trade off them, and that was completely destructive. I mean, I found out like very, very quickly that it doesn't matter. It doesn't matter. It does matter, but you don't know when it actually will start mattering. So, macro is great. Macro is great, and it's a good thing to have the macro background. And you know why it is a good thing to have it? Because at some point, when this gravity of the macros immediately becomes relevant and immediately because something happened becomes important, then you have already expected it, and then you can say, with combination of some technicals like, this is the true turn. This is the thing that's going to take, for example, and I'm giving a random example, this is the turn that's going to actually crash stocks, for example. I mean, because we got that X event which enhances the macro thesis that I had, and I think that this is going to be the triggering factor, that will make again, for example, the markets align with the macro reality. So that's why it's important to keep it in the back of your mind. And I can give you an example for that. I had a lot of discussions the first times I was looking to short on the USD CAD. A lot of people were telling me like, why the hell do you expect, if you remember I shorted it up here, it doesn't matter that I took profits down here, I then tried to re-enter, but we never tested my level. But I've been long other assets that are correlated. Of course, that would be great if I stayed with it, but they were telling me like, and then when we had the continuations, and I was warning that you should be very careful because this thing is not going to turn around, it's impulsive. They were telling me like, but the Canadian housing bubble, and why do you believe that the Canadian dollar is going to outperform the US dollar? I mean, Canada is in a much more serious situation, blah 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 blah, and
I told them this week and yeah,
all that, and and I told them, listen, I don't care about the Canadian housing bubble. First of all, that was the wrong thesis, because as Stelios said, one of the most serious reasons, and we mentioned it last week, we were talking about, at some point, I don't even remember the date, we were talking about the possibility of the BOC hiking and why would they hike, etc. And I said back then that, listen, do you really think the language of the BOC will be dovish even if they hike because they mind a stronger Canadian dollar? For them, a stronger Canadian dollar is an easy barrier to tame a little bit the inflows of money that are coming into the Canadian housing market. So even if you believe that the Canadian dollar is not going to outperform the US dollar because the Canadian housing market might be about to implode, you can turn this argument around. Why wouldn't the BOC favor a stronger Canadian dollar, since that on itself, it's like an interest, an extra interest for the money that are coming into the housing market? Because let's be honest, the vast majority of the money that are creating this issue are not local money, are Chinese money, are Russian money, etc., etc., etc. So when you have to sell your rubles or whatever, or your mimlis or whatever else to buy Canadian dollars, and now the FX rate is worse for you, you obviously need to spend more money to buy a house there. So in essence, it's like hiking the prices of houses for the foreigners by having a stronger Canadian dollar. So why wouldn't they allow it to happen? I'm more than sure that they actually welcome it.
So anyway, I've heard and I've experienced that markets first in manias. Markets first break the people who bet against them, then break the people who bet on them. So you never know how long a rubber band can stretch, do you?
Definitely, you can't. You can't.
So what about EG? Did we get enough to change?
Yeah, I'll show you. First of
all,
all, let's finish about the Canadian.
okay.
I think that now that wave 3 of 3 is mature, 1, 2, 1, 2, 3.
Yeah.
We should soon see a fourth, which might just be to this level, to this breakout level, to 128.70, and then we should see another move lower. So what I would be guessing that will happen is that we would soon have a reaction higher to somewhere here.
Yeah.
And then we would have another move.
Yeah, we're going to take out the May low from last year.
Yes, and then
before
see
it's
a
good.
bigger, and then
you
see
know,
a BBC.
You know what, Steve? With all the micro stuff, what's even more important in my view is anyone who is a subscriber has been hanging out with us in Face. I don't think anyone was playing the long side of Canada. They were either short or out because I don't remember anything.
Yeah, one of the things we had talked back then, if you remember, one of the things we had talked back then, Dale, if you remember, not only that, is that banks had already started issuing those very nice, analyses that say 145 is possible, 150 might be the next target, blah, 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 blah.
Yeah.
And all those nice contrarian indicators, Okay, we have a lot of questions. We will have a look at them all. Let me take them with order. Okay, Europound. You asked about it as well, so let's have a look at Europound. Yes. I see all your questions. We're going to answer all of them. Don't worry about it, guys.
I want to call you Mr. CAD. You're such a CAD, Steve.
I am.
Before you got married, you were a CAD. I know you were.
Oh yes.
Mr. CAD.
Okay, Europound. Things are quite obvious now. We are testing this wedge support. We had the overthrow. Everything looks very nicely aligned for a break lower. If you see it, I think that 86.50 is the next target. End of story. So as long as we see a break below here, I think that 86.50 is going to be tested one way or another. That's it. I mean, it's as simple as that. Now, if we see us getting supported here, anything is possible, even another high, and perhaps then a redrawing of the wedge, something like that. So, we are at an inflection point. You either see something like this, or you break down from here. As simple as that. So, this is the level to watch. Okay, that's Europound. Sorry, I can't give you anything more, but when you're at an inflection point, you need to be a little bit patient and see what's going to happen with it. Now, having to do with indices, because I see a question about SPX. Before I go to the SPX, let me show again what I showed yesterday in the Nasdaq. I stopped being bearish the Nasdaq somewhere here. I'm not long. I don't have the guts to go so much against my thesis that stocks are going to implode and the valuations are stupid. But on the other hand, I know very well that they can become stupider. This was a perfect ABC correction, and I'm starting from the Nasdaq because the Nasdaq is the one that put stocks under pressure on this occasion. And what do we see here? We see a perfect corrective channel, a perfect ABC, and we're currently breaking above it. I know that Blake is looking for a pullback, and he might actually get that because what I see here is a possibly one.
Maybe that was A, B, C. That's A, and this rally is B, and we get another C.
Yeah, perhaps it's a double zigzag, like ABC, X, ABC. Yes, it is likely. But since a simple ABC correction is statistically more likely, I'm statistically inclined to believe that that was the end of the correction. That doesn't mean that there is proof that there is the end of the correction, but let's say, okay, you want to be even more careful, then you might want to see a penetration of this high, because after you see that as well, then the double zigzag correction also goes out of the window, and then there are other corrective patterns that remain, which are very, very complex and even more rare. So what I would say here is that it's very likely that we're heading to new highs, and even if you see at the structure, at the short-term structure, I don't need to go to a 4-hour chart, you can see 1, 2, this is clearly impulsive. It's already been 5 days in a row that we're up. 3, perhaps soon a short pullback, then a fifth, then a bigger correction, and that might be the first wave of another move higher. So this 1, 2, 3, 5, a 4, 5 might be the first wave of a new 1, 2, 3, 4, 5. And why, I know that many of you might have like, you know, a lot to say about it, but why, blah, 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 etc. I can tell you one thing for sure. Why would you want your main thesis to be something different when you're viewing a market that has moved like this?
Yeah.
Right? Just think about how many times people try to find excuses why this was the top. It's only going to be the top once. Yeah.
I tried it a million times.
Yeah, and it's only going to be the top once, okay? Once. So even when you short, like I did here, and then I did here, and I made some good money, I'm shorting because I think that the short-term structure is overstretched, and I have like a technical, you know, target or view in mind. But
you have technical contingencies, not just an opinion.
And it's not only that. I'm starting with the thesis that I'm timing a correction. And if I get lucky and it happens that instead of a correction, this ends up being the first impulsive move lower after so many years of an uptrend, yuppie, good for me, great, I got lucky. Okay, Euro pound we had a look at, SPX, because a friend is asking for SPX. I have nothing different to say here. I mean, another correction here, I said it many times when we were looking at the SPX, unless we break below 2,400, and this is when I drew this actually, when we were testing this, I said that, listen, okay, we started moving lower, fine, that's a good step, but unless I see a break below 2,400, this is what's going to happen, and I drew this. If we see a break below 2,400, I said, then we can discuss about having a deeper correction. We didn't. So if you ask me what I think about the SPX at the moment, I think that it's way more likely to break to new highs than not. Okay. And definitely I don't have a pattern to short it. I mean, somebody can in simplicity say, I'm going to short here, I'm going to put my stop loss against the highs. And it might work. But for me, that's not enough of a thesis to go short. You know what I mean?
Yes.
I would also want to see a complete pattern, and I don't have this. This is even likely the beginning of a new pattern higher. So
you know, never got, Nick said in her review, we never got to the harmonic targets of 2465-ish.
And as it seems, she was right. We're probably heading to new highs. Now, yeah. I have Luke asking me about the Bund. I wrote about the Bund yesterday, and let's have a look at it together. I said I gave two possible levels for a rejection of the Bund. One of them that I wrote was a retest of this ascending trend line, which is what we got today, and for the time being we're seeing a shooting star. The other target I gave in my analysis was perhaps a retest of this level, or the 50 fib, which is at 163. But anyhow, I wrote that as long as we remain below the 61.8, I'm definitely in short the bounce approach. Okay, we might, I mean, let's see how this day ends, but we might have seen all we were to see before the next move lower. We did get the retest of this broken ascending trend line. We got rejected for the time being. So why not? Now we might even head for the next target, which is here at 159.70 roughly. Or even lower, of course, if we break that, then our next target is going to be, let me actually fix a little bit the chart so you can see it here, this trend line. So the levels I'm watching are this zone, and if we break this zone, once again a retest, let me zoom out, of this trend line. So that's what I'm seeing. So I remain bearish the Bund. I don't exclude the possibility of another high in this correction that shouldn't most probably surpass 163. So in the short term, we might even see something like, let's delete this.
You know, Martin Armstrong talked about a sovereign debt crisis when I interviewed him a year or so ago. You know, he was a little early, but his thesis was it begins in Europe, then to Japan. So we're talking about bear markets and bonds, right? Mm-hmm. So Europe leads, and then Japan, Asia, and then the U.S. But that's what he's looking for. The biggest bubble is sovereign debt.
Listen to me, Dale, and I'm saying that very, very, very bluntly and honestly. And, you know, I'm not a guy that exaggerates. It's not a matter of if it's going to happen.
Yeah,
it's about when. There's no question about it. Global debt is absolutely unsustainable.
That's the art of this. It's not a science. It's an art.
Yeah.
The when is the art.
The when. That's it. That's the only thing that matters. It's not the if.
Yeah.
It's not the if. I mean, it's like saying, okay, my son was born like 15 months ago. It's not like if he ever dies. We're humans. We are all going to die. I'm hoping that's going to happen when he's 100 years old. You know what I mean?
Yeah.
But it's not a matter of if. Some things are...
death and taxes.
Yeah, exactly. Same with going through this kind of crisis.
Yeah.
The governments are going to do their best to prolong it, and they might actually succeed of doing that, you know, for more years.
Yeah,
but it will happen. There has to be a reset.
Maybe Chris Kerr has some ideas on that. I see Chris in the house.
I'm really looking forward to hearing about it.
So,
Chris, I hope I'm right. You are doing gun work, and you're looking a lot in seasonality and timing. From a technical standpoint when events are going to happen, correct?
Yeah, so Chris, I just made you the presenter. We're all looking forward to hearing you, seeing you. You have some fans here in face. So I pass the ball to you, buddy. Getting ready for you to take a three-point shot from outside the arc. Are you there, Chris?
Yeah, I'm here. How's it going, guys?
Oh, hey. Hi, Chris. How are you? It's been a long time. Help me. I remember everyone's trades. You and I have done this before, haven't we?
No. It's our first time. First time.
Okay. I interviewed so many people when I ran LAR on FX Street. I thought you may have been one of them. So I'm very happy I reached out to you. And didn't you have another handle before Forex with Chris? Didn't you have FX World Boss?
yeah, that was my original Twitter handle. Yeah.
So did the president take that away from you because you had World Boss in there?
Yeah. Donald Trump had a problem with that, so I had to switch it up.
All right, so since it's the first time, Chris, and I do want to get your views on some markets, but I also find it real interesting because there's always people just starting, and someone who's gone through the process, who's had the journey of the long and winding road of trading. It's always interesting for us to know what your beginnings were like, how you ended up being a trader. Did you have mentors, or who influenced you? And can you tell us a little bit about what your struggles were like early on, and who's responsible for getting you into this business?
Oh, okay. I started in 2008, 2009, and if you remember, that was the mortgage meltdown, and stocks were going crazy. Stocks that were $20 or $50 were trading at $4. So I said, why not buy these stocks? Because I know the market cycles. Even at that age, I read a bunch of books that the stock market is the best place to put your money, and over time, it just it continues to rise. So a $4 stock at the time, it just made sense to buy it.
As long as it wasn't Fannie Mae.
And I actually made the mistake of buying Fannie Mae.
Okay, interesting. Okay. All right.
But I made some right moves, and yeah, I got lucky, I suppose. But after 2009, the sale was over. It was hard to get a stock for $4 anymore. So I started looking into other ways, and I found my way into Forex, and yeah, it was very different from stocks, because you're dealing with leverage, you're dealing with a lot of different scenarios, economic news, stuff like that. But yeah, it was very difficult in the beginning, because you're working off of information that's kind of public. YouTube videos, people on you're working off. Yeah, I'm still here. You're working off YouTube videos, and you're not really getting a full.
So you had to learn how to separate the wheat from the chaff on the internet when you first started. So you're pretty much self-taught then.
I'm self-taught, 100%. 100%.
Okay.
Yes.
Did you have any influences? I see you use sticks. Maybe Steve Neeson was an influence. How did you decide to go with candlesticks? I mean, for years I just used bar charts, but curious how you ended up choosing sticks. And I see by looking at your charts, you trade naked, no indicators.
Right.
So I hope you keep your shades drawn, and you know what I mean, if you're trading naked. So yeah. Why don't you tell us about who influenced your methods? And you have Euro Yen up here. Obviously, we had that dramatic move from April to the recent high. What are you seeing here, Chris?
Okay. With the Euro Yen, obviously you have to take a look at what the Euro is doing and what the Yen is doing to kind of figure out what's going to happen next. But basically, if you look at the Yen has been like on an uptrend for a while now. It hasn't really broken this what is it, May swing high, and what's that, March swing high.
I think we did take out the May high. They took the stops over the May high out. Didn't they? Yeah. See how? Yeah. So therefore, that to me looked like a stop hunt. But but okay. So you're looking at both an uptrend in Euro that's still, somewhat uninterrupted, and in the Yen that was uninterrupted until this week. So and I'm assuming you have a long-term bullish bias.
On the Euro Yen, sort of.
Okay.
Let me explain what I think is happening. My trades are not too long, so I don't hold them for months at a time. I look, my time frame is about 2 to 3 weeks on average.
Swing. You're a swing trader.
Basically.
Okay.
So I'm expecting some yen strength to come into the market. So I'm expecting Euro Yen to either test that 130 one more time.
Okay.
And drop back down to 128. But I want to see how it reacts to 130 first. It's a nice psychological level. Yeah, I like it lower before it hits these demand levels down here, before it starts to head back up.
Okay, so supply demand looking left is part of your style. Yeah. Were you an OTA student? Pretty expensive. Sam Simon, you watched him on FX Street, I bet.
Absolutely.
Okay.
To answer your question, Sam definitely influenced me in the beginning. So yeah, I watched a couple of his videos, and it made sense. And I just over the years just worked on it on my own, and came up with a formula that works for me.
Okay, great.
Mm-hmm.
You ever follow that Forex stop hunter Dale Pinkert guy? All he ever talks about is RSI and 3 drives and stuff like that.
Yeah, I pay attention to what you're doing, Dale. But you know, yeah, I like what I'm doing, and you know, it works. Your 3 drives make sense. I see it occur in the market all the time, like you know, like right here, 1, 2, and then a 3rd drive, impulsive move.
Yeah.
So it does happen.
Yeah,
I do.
It's not, I'm not the, you know, creator. It's not an original thought. I learned it from a guy named J.R. Hill in the 70s. So, yeah. So, you know, what's original work in the market? You know, Solomon said there's nothing new under the sun. So you just, you know, I think it's great what you just said. It's a pearl. In fact, Jack Schwager would congratulate you on finding a trading style that suits your personality.
Absolutely, absolutely. You know, yeah. So yeah, I want to talk about the Euro Aussie and Aussie Kiwi. Is that fine?
Oh yeah, sure. Yeah. Yeah,
okay.
we you know, the community has an interest in those pairs.
Okay. All right. So if you guys I don't know how many people are in the room, but if you guys have been following Euro for the last 2 or 3 months, you know, we've had a strong up move, and it left gaps open in the market, and I'm a big believer that gaps eventually must be closed.
Why?
Say it again, Dale.
Why?
Just
and eventually it could be a real long time sometimes, can't it?
It can, just like this one right here. But
yeah.
Let's where was it?
I mean, I agree, but I've seen gaps go unfilled for, you know, month upon month upon month upon month. If it's a true breakaway gap and you know, the beginning or the onset of a move, sometimes it, you know, you could go broke trying to trade the gap being filled. That's all I'm saying.
No, I agree
with you. I think it will in Euro Aussie, but I just want to make it clear that sometimes is a little bit of an overstatement. That gaps, you know, eventually get filled, because eventually could be when your account is empty before it happens. Right, buddy? Okay.
Right. So, yeah, I agree. But I still pay attention to gap opens and the momentum that's happening as we head closer and closer to the gap. So if you pay attention to Euro Caddy for instance, this gap right here just about closed 2 days ago or yesterday.
Right.
If you look at Euro.
So is this does the gap fill set up a, you know, pretty good break? That was a 3 driver up there. Does the closing of the gap, is it one of your contingencies for perhaps wanting to be long EuroCAD in here?
Yes. I'm looking for sideways movement. I want the dust to settle a little bit before, you know, because usually markets before they bottom, they move sideways, and then once they move sideways, they start an uptrend. So basically, I'm just waiting for this to kind of bottom out and the selling pressure to kind of ease off, and then start to break these 148 supply levels, 149s, and look for a buying opportunity back down and drive it back up. But what I was trying to say was that if you look at EuroCAD, it's closed its gap. If you look at Euro Kiwi, it closed its gap as well. The only pair that hasn't closed its gap is the Euro Aussie. So I'm looking at that these days, and I'm building a bias that eventually in the next two or 3 weeks we might see some Aussie strength
Right.
to close that gap, because all the other commodity pairs have closed except for the Euro Aussie.
That's insightful, buddy. You know how patterns. Sometimes you'll see the same patterns emerging in different instruments, and basically you're saying that all these other pairs filling the gap is a precursor for Euro Aussie doing the same.
Yeah, absolutely. It just it makes a.
I think you're going to be right.
Hopefully so.
Just another trade, right, Chris?
Yeah.
Let me ask you this.
Mhm.
How do you, and I think this is a problem for traders, and I know you teach, I'm going to get to, what your business model is besides your trading. I went to your blog site.
Mhm.
How do you psychologically make each trade just another trade and not too important? I find that when the outcome of an individual trade is too important to them,
Mhm.
it usually doesn't work, and it's usually because they're underfunded or over leveraged. Do you agree? And how do you just say, well, like if a trade doesn't work out, next, and not dwell upon it and get into a fetal position, but just like a good NFL quarterback throws an interception, he's ready for the next play, or he gets sacked and he's ready for the next play. What psychological lessons have you learned? Because I could tell you have a good feel for directional moves in the market.
Mhm.
Did you have to overcome anything psychologically to become a proficient, effective trader?
Yes. Yeah, definitely. How I look at trading is I try to just not. I've learned try not to be emotional about it. You have to come up with a strategy, a system. You have to look at your setups and gauge the probability of those setups. And once you realize that this has a high probability of working, you enter the trade. So if it doesn't work, you've done everything, you've done your homework, you've done everything possible that you could do to line it up as best as possible. And if it doesn't work, it doesn't work. You just move on to the next one. And over time, you just build up enough confidence to say, okay, I'm doing everything right, and this over time, it will get, if I continue to follow my rules, and I continue to follow the rules and do the setup the right way, it'll lead me in the right direction. So
How many years did it take for you to come to that mindset? I ask everyone that question because a lot of people come into the business and think they're going to be a star in the first year. And I think just like any other profession, it takes a period of years, just like getting a bachelor's degree or an apprentice carpenter, becoming a journeyman, and then a master. How many years before you started to be an effective, profitable trader, would you say, in FX?
I would say it took about 4 or 5 years.
Okay, interesting.
Yeah.
Okay, so that's why I'm sure you run into it. And do people ask you this question too, Chris? Can I trade for a living with 10K? And what do you say to them? Because I say yes if you want to live beneath an underpass.
Well, my thoughts on that. I think to start, you need to start with a decent account size. I think as you gain experience, and you make less mistakes, you can get by with 10K. But over time, you still need to build your account to be a little bit more serious with it. I don't want people to approach trading and say, okay, I need to take out a mortgage on my house,
Yes.
To get started. Because if you get started with a large account size, you're gonna blow it away if you don't have the right amount of experience. But I think I think between 10 and 20K, would be all right to start. But as you gain experience, it'll grow, and you'll just get better at it.
Okay. Was there another instrument you wanted to go over? Did you say WTI or I'm not sure, USD CAD or Aussie? Aussie Kiwi. Yes. Okay.
Yeah. Aussie Kiwi. All right. So yeah, let's talk about this one. If you look at the weekly trend, we're kind of in the pit of a demand area down here, and it's bounced off really nicely off those 104s. I thought we could test down to the 103s, maybe do a stop run, and whoever has their stop down here would get stopped out, but that didn't happen. So it looks, with my thesis, if you combine the Euro Aussie and just Aussie strength working with that theme, it looks as if the Aussie Kiwi might be heading up as well. That 105.6 area, let me zoom back in for a second. This 105.6 area, we've tested it like so many times, and we finally had that blue candle to break above it. So I think these buyers down here have enough pressure against the sellers, whoever was there. I think the buying pressure is strong enough to break the supply area here. So I'm kind of expecting it to kind of rocket up to the upside over the next couple weeks. And especially when you look at this candle right here, the day isn't over yet, but the fact that this wick was able to break back above 105, it's kind of an indication that buyers are willing to defend the 105 area. Like I said, the day isn't over yet, but from what it looks like so far, it looks like Aussie Kiwi is a buy. I like it to 107 and a half to test 107 and a half right up in here, and we might pull back a little bit. Long term, I think this is a trade I'll hold on to for the rest of the year. I fully expect it to break and test this 110 again eventually. I mean, there's actually a long-term count off the weeklies once you break out through there that could take it to the 120 handle. But I don't know if it's going to bother you or not, but I agree with every instrument that you showed today and your forecast, so you may want to lighten up. So why don't we get to perhaps you want to show your blog, Chris, and what you do, and your business model, and for how people could get a hold of you if they're interested. You want to do that now? Yeah, sure. Yeah, so you guys can reach me at Trade FX with Chris. That's the website. That's the blog. In case you guys don't know what I look like, that's a picture of me. Basically, I try to give lessons or tips on stuff that I've learned early in my trading. About trends. By the way, I don't really believe in trends too much, especially on the shorter time frames. I think when you get on the larger time frames, the market starts to trend. But on a smaller time frame, you know, the trades price basically bounces in between levels. But anyway, yeah. So this is Trade FX with Chris. I write articles about lessons that I've learned early in trading. You guys can check me out there. I'm always available on Twitter. You guys can follow me on Twitter. I really I really want to hear from you guys. Trading is a lonely endeavor.
You can hang out. You're welcome to hang out with us here in Face anytime, Chris. And I encourage people to follow Chris. There you go. Here's his handle. And I want to thank you very much, Chris, for coming here and sharing some views and sharing your story with us. And I'm glad that I reached out to you and that you decided to share your time with us today. It was an interesting interview, and I wish you nothing but the best, and may pips rain down on you and all of your ideas. May Aussie Kiwi go to 120 while you're long from 105. And very nice to meet you, Chris, and you're now one of my Trading Warrior brothers.
Thank you, Dale. Thank you. I appreciate it. Right.
So thank you very much, everyone. That's been Chris Kerr at Forex with Chris. Twitter handle is the same as his website. Thank you, everyone. Thank you, Blake, today for your analysis. Good luck. And Steve and Stelios and the community for your great questions. And we'll wrap up the week tomorrow. Most of all, don't just count your pips, count your blessings, and sell the guppy, looking for another wave to the downside with stops over the high. So this is Dale Pinkert. Those are my calls. The next one's yours. Have a great day, everybody. Enjoy your summer. Thank you again, Chris Kerr.
All right. Thank you, Dale. I appreciate it. All right.
Yep. All right, buddy. Okay, guys. Enjoy your summer day. See you tomorrow for TGIF.